Hey, this is Sasha, and welcome to another episode of Let's Talk Stocks, episode number 180. And in this week's episode, what we're going to do is take a look at the earnings season. We'll take a look at some news tidbits on what's going on in the marketplace, and of course, take a look at the charts of some of the popular companies. Now, of course, if you want to take a look at some more in-depth charts as well as get some of my market reviews, then take a look at the Traders Fly website, and that's where you can get a membership to some additional charts that I take a look at and a little bit more frequent. So with that being said, let's take a look at some of these market news headlines, what's making some headlines, and then we'll jump right into the charts. So first things first, looking at overall what's going on in the markets, really it's earnings seasons. We're coming into the earnings seasons and we're going through the earnings here. Some companies have already released earnings, like for example, Netflix, and other companies are due to release earnings. So that's really what's going on and what's happening. And this is what investors are watching and paying attention to. Now, when you start looking at what's coming up tomorrow, you have a few different major companies, right? There's many more companies, of course, that report, but some of the more major ones are companies like General Electric, Honeywell, Procter & Gamble, Schlumberger, you have Black & Decker, TransUnion, Steve Madden, and so forth. So you have a couple of these major companies coming out on Friday here. And you've already had all these companies that released earnings like American Express, Morgan Stanley, IBM, Goldman Sachs, CSX, and Netflix, as I mentioned. That's kind of what's happening. And as you can see with some of these companies, when you take a look at them, companies like Netflix, you can see earnings can really pop a company much higher, or it can even make it drop. Also CSX, take a look with earnings, how wide or how much this popped, pretty significant really when you look at it. So definitely it can rattle some stocks and shake them and make them move much higher, or it can also get them to drop much lower. So here's kind of Goldman Sachs, but really Goldman Sachs has just been isolating here for quite a while. It is at near the peak, just like it was in 2008. So with that in mind, you want to be a little more cautious as you trade throughout earnings. So if you're more of a swing trader, or let's just say you break down a portfolio, and if we look at a portfolio breakdown, let's just use a triangle concept. An investor may have a large amount, and I'll just say, let's say here 50%. This could be in long-term holdings where you're not really worried about earnings. This you'll still hold through earnings. But then what you might do is you might have, let's say 20%. This could be in speculative trades or something like swing trades. And when you do that, now you have your money split up into different categories, right? So you have some in long-term, some in speculative or more swing trading. And for some people, the speculative part is not even in here. It might be swing trading or it could be options, right? Everybody has different levels. And then the rest right here, this could be even more speculative. So this could be like penny stocks, and this could be just a basic portfolio breakdown for you. So what I'm getting at is that when you're looking through earnings, you might have 50% in long-term holdings. Those you'll hold through earnings. The option trades or the swing trades, you probably won't hold through earnings. And things like penny stocks, or let's say maybe if you're doing options as your main speculative play, like let's just say you have this only broken down in two, and you're maybe only trading, this could be 60%. This is the long-term holds. And the rest could be, your swing, it could be your options, and your speculative plays. So these you would not hold through earnings, but the long-term holdings you probably would hold through earnings. So anyways, my point being is that when you're looking at your trades, understand what you're trading for that investment. If it's a longer-term hold, you probably will hold it through earnings. If it's more active, you probably will not. And for me, most of the time, I am not holding through earnings because I have a larger chunk more in swing and option positions and a lot less so here in long-term holdings. And also this depends on, let's just say if you're trading more like indexes or ETFs, like let's say you're trading the SPX or SPY options or IWM, DIA, QQQ, these kinds of things, then obviously earnings doesn't even matter because well, you're not going to be affected, right? So with that in mind, be a little more cautious as you trade through earnings. If you are in a swing trade, maybe reduce your position size by half or 80%. And then if you feel like you're a little more confident with the earnings, then you could hold a little bit of chunk through. And that's just my personal insight on trading earnings. Now, with that in mind, as you take a look here today, stock market is losing a little bit of ground. And, you know, they talk about why and due to earnings and this and that. But the reality is when we really look at the market here today and we start looking at the movement, you know, we've kind of ran up pretty good over the last couple of weeks, right? We did have, you know, 1, 2, kind of 3-day pullback, but now we're pulling back a little bit. And I think it's okay because now we're back into this normal upward trending line. Now, if we break below this, I think that's fine because now you can get a little bit more healthier angle of elevation. If it's a little too steep, you know, it's a rocket ship, you'll probably get a pullback. But here, when you're coming back, because what ended up happening was we have this normal line or level that was being created, but then we had a secondary line that was starting to become created, and that didn't hold more than 2 to 3 days. So that's why we're pulling back to this other more normal angle, because the other one is a little too steep. Now, sometimes these things get oversold and maybe you'll pull back and it'll kind of reevaluate itself, it'll recalibrate itself. And then you'll get another little bit slower pace growth line there, but that's okay. There's nothing wrong with that because that means digestion is taking place. So for the time being, I'd watch this kind of line right there if you're looking at the shorter term. If you're looking for a little bit longer term, I mean, your key line in the sand is still this 2600 level. And my other thing that I'm really watching is, are we getting kind of, you know, I mentioned this earlier when we created this top right here. Are we getting a third kind of lower high? That actually starts to become a problem if you are starting to create lower highs, because now, you know, normally the market's heading, let's say, in this direction, creating higher highs and higher lows. But if you start moving in the other direction where now you're starting to create lower highs and lower lows, now you're moving in the downward fashion. So this is one thing to watch, and we're hitting that third peak kind of right now, because you can see right there, there's 1, there's 2, and well, here would be the third if we can't get above that. Anyways, long story short, let's take a look at a couple of other things. You know, Amazon talks about its Prime subscribers. They got a lot of subscribers, a lot of people giving them money. I think that's fantastic, great news for the company. For me, I'm personally not an Amazon subscriber. I actually try to contribute to smaller companies, buy from independent people, just because when companies get too big, they care less and less about the customer. You know, and for me, I don't, the benefits, you know, you can watch the movies. I don't really have time for that because I'm busy making videos for you guys or working on course material or reading books. And also, you know, you could listen to music, I guess, and get free 2-day shipping. But, you know, if you're not buying every single week or you're not worried about getting shipping the next day, you know, I'm not sure what the exact benefits for being a Prime subscriber are. But this is good news for the stock because a lot of people are buying into the companies. A lot of people love it. You know, for us, we're not huge consumers to constantly buy things. I find that the more things you have in your house, just the more clutter there is, and it just becomes overwhelming. Anyway, with that in mind, these numbers are good for bigger companies, and it just shows you the projection when you have Netflix, Spotify, Apple Music. You know, Spotify has a lot of subscribers as well, which if you start looking at, you know, the stock, this could start to create some interesting movements, especially if we start hitting this 155 level and breaking out. You could see a nice projection because the numbers are kind of interesting in line to kind of getting into a membership plan or a membership platform for the company when you compare it to kind of Amazon or Netflix. So that's really interesting, and that's kind of why I pointed out that article, is that now when you look at these newer IPOs, you know, start watching a few of these levels. Of course, be careful at the 155 here. You want to give it a little wiggle room, maybe 157. And then as you get into this IPO price range, also be a little more careful. But you know, it's something to kind of watch and keep an eye on, especially as you start breaking things down here on the charting platform, you can start seeing that we're starting to get some bullish volume that's starting to come in, which is interesting. You do have a few red spikes here, but the bullish volume is starting to pick up a little bit. So keep note of that. Anyways, that's the hourly. There's not a lot of data there for that chart. Okay, so the other thing is the Federal Reserve here released its beige book. They talk about the tariffs concern. Of course, the tariffs are a concern. I mean, now you have manufacturers and farmers stockpiling different things and different resources. It's kind of like, you know, when you play games, what is it called? Settlers of Catan. You're playing the game and you're trying to stockpile and hoard certain types of material. And this is what's happening because nobody knows what's going to happen with tariffs. And when you start looking at these kinds of things, it could be a problem for the economy. And it's usually not like this week or this month, or maybe even not in the next 3 months, but usually this starts to come in and creep in, you know, 6 months, a year later. It could be 2 years later, where it becomes a problem. Maybe by the time, Trump is even gone, that's when the problems start to happen, because it takes time for all those problems to evolve, right? If it's like, if you don't change the oil in your car, you could be fine for a couple of years, and eventually that'll creep up and then your engine might smell, but it could still run maybe another year or two, depending on how you drive. And eventually, you're going to have some problems, but for a while, it'll still continue running. And another thing is when you look at the TPP, this goes along with the tariffs problem. When you have the TPP and you have countries that are building strength together, and we're trying to be separate or isolated from other nations, it makes it tough to negotiate. Whether that's tariffs, whether that's making more money from the goods and products that you sell, it becomes a little bit more of a problem. Because remember, the whole point of that TPP was, so not one country is too big. Normally you have all these different countries all over the place. And the problem is their trade becomes expensive when one country wants to trade here, 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 here. It becomes more difficult. And if you have one big country, it can easily dominate all the other countries. That's why when you look at, we had Europe that became kind of its own little area into the Eurozone. Then you have maybe a couple of other areas. So if you have like 5 or 7 regions, think of it almost like continents, it's a lot easier to trade because, a few countries in this group, could create a win-win situation, such as, hey, if you're not good at manufacturing cars, we could give you produce because we're good at doing produce, but you send us your cars and we do it kind of at a discount without all the taxes, without all the problems. And that creates kind of a win-win relationship. So maybe you're not food growers, you're car manufacturers, but we're food growers, and we create that win-win. And that's kind of what the point is. But now if you're kind of isolated on your own right there, maybe you're big enough or you think you're big enough, but it still creates a problem with the trade dynamic. So anyway, again, it could create a little bit of tension there depending on how things work out with all the deal makings potentially going on, but nothing's really happening yet. So you need to be a little more cautious in the marketplace, and that's why you'll see some sell-offs probably sooner rather than always later. Because in the past, as you recall, things will go up and up and up and up and up. And now all of a sudden, boom, you have these down moves. And now typically when you get an up day, you'll get kind of a pullback, whereas in the past you kind of get an up day, an up day, an up day. Now you'll kind of get an up day and a down day, an up day that sells off, an up day and then a reversal. So you get kind of this, still kind of a movement in the up direction just due to inflation, but you get a little bit less kind of euphoria all the time. The movements are bigger just because we have more volatility and people trade emotionally, but there's more weakness that comes into each bar, right? There's more weakness. It goes up and then it can't make it through. Kind of like a couple of these bars, like this one, obviously today, this one, and you could see this recent one, or here where you got a pop and then a reversal, pretty much something like that. So that's kind of what ends up happening. Let's take a look at a few charts here. When we take a look at Amazon, here's kind of our overall movement, and we have a little bit of an accelerated movement. I would be a little careful here. I wouldn't chase. The volume is there, But don't chase it here because you could get a little pullback to this level or angle or even somewhere around here because you got a couple of gap ups right there. Be a little more cautious right there. Tesla's still hanging around that 300 level. I think it'll do so until after earnings. You have Apple also kind of back into this range. I mean, if you're doing calendars and iron condors on this for options, that range has been there for 6 months or so. So it's doing its thing. Netflix also, we had earnings come out. This thing popped. 340 is now a little bit of the top. Really, we had that 330 level. Got into that and pulling back a little bit. It's kind of similar to what happened over here. We popped on earnings a bit right there, but then we had a few days to pull back to test that gap. So will we get a gap test at 320? I don't know. You had earnings also in the past over here where you popped a little bit, 2-3 days kind of isolated and a little pullback. So remember that, just because you had a 1-day pop doesn't make it that it's going to keep going up for the next 5 weeks. You'll probably get some profit taking here, even if it comes back to, let's say, 322-ish, 325, 324, and then you might get higher prices. But for now, why chase? Why chase? It's going to be a Friday anyway. You don't need to chase things. Be a little more patient, or spread your trades out a little bit. You're not missing anything. 1-2 days. I mean, how much more money are you making? An extra 0.25%, an extra 1%, right? Because right here would be an extra 1% if you got in it right now compared to if it went up tomorrow to where it opened, right? So, so it's very minimal compared to the big picture, right? Facebook, the same thing. Look, if you got in it right here versus the next day or the day after that, I mean, what's the main difference here? Is it 0.5%, 0.25%? I mean, how much money are we talking about? I mean, it might be 0.25%. And here you're still kind of isolating. So you didn't miss anything. So if we look at this chart right there, it's still just holding this upward trending line right there. So that's kind of the key and the line in the sand for Facebook. You want to make sure it holds here. I don't know if this is a short-term bounce to where we get a pullback later. So this could create kind of a to B, B to C, C to D pattern. But this ABCD pattern is a shorter term, whereas this upward line is a longer term. So, just be cautious of this upward trend line because that's kind of a key. And that also puts you right around that 150 level, which has a bit of a trading area and range right there in the stock. I think we had IBM earnings also that came out. This one's kind of just whipsawing lately. I mean, you're really just moving right here between 145, and really it's been kind of in a downward trend, so it's acting weak. I don't think it's really investable for the long term right now until you can see an upward kind of movement here in that direction. But right now this 200-day moving average is really just kind of in a downward slope, and it's rejecting at those levels. So if you look at this, let me make it bigger. If you look at this 200-day moving average, you can see we're just kind of rejecting here in the whole year of 2017 and part of 2018. So that's a whole year right there where it's just moving on a downward trend. Shopify as well. You can take a look right here. This is kind of our key line in the sand. It's trying to hold 120. But we did roll over a little bit on this 20-day moving average. We popped a tad bit. But again, is this a shorter term bounce right here to where we can reject that 130? Because 130 here is a little bit of resistance. So be careful here. You're isolating in a few stocks. They're just kind of moving a little sideways here and there. And that could bring you a little bit of trouble here. Let's do one more square here. Same thing as almost Shopify, trying to break out right there. But again, a little bit of trouble. 50 is the key. So, you moved higher. We broke out of it. But a lot of these stocks that are breaking out are not doing it in massive, massive strength because there's a little more worry now in the market. People are more concerned in the marketplace. And, and you have to be a little more cautious in that case because these sell-offs can come very quickly. Just like in today's market, you could see, we were basically last couple days, 3 days up, and now we take both of those days and maybe even the third day out by tomorrow. Who knows? So it's acting a little more weak. So be a little more careful here in these marketplaces. Be a little more cautious. Take your profits a little earlier. Watch your stops, and don't be scared to take a day or two off to wait till the dust settles if things and conditions are not lining up for you. Anyways, I want to thank you so much for joining me in this week's video. I have some great things coming out here and planned for you. Make sure you get on the newsletter right there by clicking this button so you can get notified when we release the Iron Condor class or a course, which is coming out very soon in the next about month and a half after we finish the last little bit of production. Very good course. We go into some live trading. In fact, one of them is wrapping up right now, which I'll give you a sneak peek so you can see. Right here, we did an Iron Condor trade that's expiring today. So you could see right there, this one on the Russell position is expiring right there. And I go through the whole trade from 45, 48 days and just take you day by day within 5-minute segments. Anyways, so get on the newsletter to get notified when this course, along with the calendars course, will be released. We also have a penny stock course that'll be coming out soon within the next few months. But if you just want to hang out on YouTube, then you can hit the subscribe button right here below. Thanks again for joining me. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.